Hello, my YouTube friends, and happy Friday. So today I'm going to talk about why I made such a big forgive me, on NextEra Energy Partners. Ticker symbol is NEP. So stick around in the video and I'm going to get into why I love this company. Hello, my name is Adam Kahn, and this is Investing with Adam K. I'm so used to saying the Rational Investor, even though I changed the handle. Um, So today is Friday, April, I think the 26th. I hope you're all doing well. It's a little bit rainy out here in Vegas. Let's talk about NextEra Energy Partners and what I love about them. You know, the stock fell from $80 a share to about $22 or $23 a share. It had naturally fallen to about $50 a share before they made the announcement that really brought it down lower and gives it the reason why I love it so much. Now, remember, as always, this is not financial advice. Please don't make any trading decisions based on what I talk about. I'm just sharing the stuff that I've learned and what I like over the years. And NextEra is just one of the ones that I really enjoy right now. But you guys need to seek your own financial advisors when making your own financial decisions because everything is personal for each individual person. So, what NextEra Energy Partners shared, and if you don't know who they are, they're essentially a sister company to NextEra Energy, which is the largest energy company, and they operate out of Florida. I love NextEra Energy as well. Now, with NextEra Energy Partner, they're the solar and wind division, and they used to do natural gas as well, but they sold off that portion to Kinder Morgan so that they could be 100% renewable, which I like on top of it because I think it's important to go that direction as well. That being said, the bad news was that they would only be able to grow their dividend at a rate of somewhere between 5 and 8% per year going forward. Well, I'm going to repeat that. They said that they could only grow the dividend at 5 to 8% going forward when they had originally thought they'd be able to grow it somewhere between 12 and 15%. While that's a significant drop, they're still growing the dividend. When the stock fell, it fell to the point that the dividend yield as of today was 12.5%. So if I can do an investment that pays me 12.5%, excuse me, sorry, I keep flubbing, 12.5% return and growing at a 5 to 8% increase, that's really good return. On top of the fact, I feel like as they actually perform on that, the stock valuation should actually go up as well. I think when they made that announcement, it really spooked people and it made the stock fall further than it should have. And even if you look at a chart, the chart looks incredible. You can see it fall from 50 to like 22 or 23, and you see the increase in volume that's a super dramatic. And even if you look back to when they originally started in, I think it's like 2014, the volume spike is absurd, which to me tells me they hit where the bottom is. If there's that much increase in volume and there's that much of a blow off to the downside, that's where you really want to be getting in, or if it's on the upside, getting out of a stock. It's blow off steam. It's the market falling and falling and falling until finally it gets everybody in that goes all at the same time. And it has to meet people who see value and come in to take on all that volume. So you're in a stock that's paying about 12 to 12.5% return. Great return to begin with. Well, that's better than what it should be paying. You know, most companies, if Fed funds are around 5% and they're successful, a return from the risk of taking on a stock like that should probably be somewhere around 8%. You should be getting a better return than what you'd get in a CD or things like that because you do have market risk. But getting 1.5 times or two times and change, sorry, forgive me, you're getting 12.5% return versus 5. To me, that's getting overpaid. I see that as a bargain. I always try to look for what I think are bargains. And to me, that's really good return. Once they've been able to do that for a few quarters, which it's already been two or three already, Once we get 5 or 6 quarters into it and the street gets more comfortable that, hey, they're doing just fine, what I hope is you see the stock start drifting higher and get back around $35 to $40 a share, where the yield would make more sense and you'd be getting closer to like an 8% return, growing at 5 to 8%, year over year, which is really reasonable and a good return. So I see it as like a double whammy of getting really well paid in the meantime and then getting the increase in the stock valuation as well. Of course, like anything, I could be wrong. So by all means, as I said earlier, don't take my advice. But I really love this company. I even reached out to them because I had concerns. I saw the stock fall so much. So I sent them an email kind of saying, hey, should I have concerns about the company? I was pretty shocked that they actually replied, set up a Zoom call, and responded to me. What I found out is their contracts are in place through 2027, which is why the guidance is what it is, because those contracts are in place. And at least until 2027, until they have to start renewing contracts and figuring out past then, they're pretty comfortable with what their guidance is because it's already written out. Now, maybe if the inflation stays stickier for longer, which it has been, when they renegotiate, they won't be able to have the same type of growth. But I'll take my chances on that, and I think they're pretty well run. The fact that they even responded to me floors me. I mean, reach out to most companies, and it's hard to imagine, like, I've tried, they don't all respond, let alone set up a Zoom call to comfort some investor who simply sent them an email. That's pretty well organized, and the guy who contacted me seemed really well educated on what we were talking about, which made me feel even more comfortable. Now, keep in mind, the interesting thing is, technically, NextEra Energy Partners doesn't even have employees. They're employees of NextEra Energy, which is a pretty cool way to be set up. So anyway, that's what I love about them. In terms of my portfolio, I've made a rather sizable bet on it, and I'm just hoping that I continue to get paid on those dividends. And I'm over attracted to the high yield that it's giving, which is not always a good thing. My recommendation for people is typically don't get over attracted to yield. I'd rather see a growing company because in the end, what's really important is who makes the most money, not who pays the highest dividend. So before I forget, if you haven't already, do me a favor, hit that subscribe button, smash the like button. Tell me a high dividend company that you guys like and what you like about it. Let me know if there's a story behind it. Because what I like about NextEra Energy Partners is there's a reason it fell. It all makes sense. I can see the volume in the stock, which makes me comfortable that where I bought it is where the buyers came in to find value, and hopefully it works out. Have a great weekend. Maybe I'll talk to you tomorrow or Sunday.